take it across to Nitin Raheja and find out what he's making of the market right now. Nitin, hi, afternoon. What is it that you're making of the market texture? Because irrespective of the sell-off that we've seen from those October highs, our markets continues to sell off, and so do FIIs. So, even on up days for global markets, we're falling a lot more.
Yes, so I think, we also had one of the best runs in the market. We were an outperforming market for a long period of time. And the kind of concentrated thing we have seen in the last few months is essentially, manifest in this. And don't forget, what was also happening is at the back of all these liquidity flows, the FIIs, domestics, it was the entire retail flow that was also contributing. And generally what happens with this is these are not being tested for volatility or corrections, these retail flows. And once you start seeing some sort of corrections, it becomes very natural for some of these. And we've seen that in the past for people to start holding back and so on and so forth. That's been, that's from a pure technical flow angle perspective. So not really surprising that, when a large concentrated selling comes, you have a reaction. A lot of the people who were riding the wave with not necessarily a lot of conviction in what they were doing, more playing momentum, are actually holding themselves back from the momentum. That's one. And the second is, of course, you have the fact that our valuations were close to historic high. We were all talking about a correction at some point of time, and now we have got it. We are bang in the middle of one, and it's in itself. I think it's healthy. It's good because we haven't even got a 10% correction if you honestly look at it as such, which is very normal for bull markets, and they happen very often in bull markets. So I think this is a part of a consolidation phase, and I think by that sense, I'm not really too worried.
Surely. What is it, Nitin, that you're making of this tearaway run on IT? You've got the rupee weakness as a big tailwind. Then, of course, Accenture upping its guidance, and that too by a whole lot. That's also further fueling sentiment in IT. But IT stocks have already had a great run all through this year. Do you believe they can be bought afresh or at least added positions too?
No, so I think, you're absolutely. So let's look at it two ways. From a pure fundamental perspective, if I look at it, I think IT is probably seeing the best phase it has seen, if my memory serves me right, post-2000. The kind of visibility that they're seeing in business, the kind of order books that they are seeing in business, and, this led by this whole move to the cloud, digitization, has been absolutely unprecedented. We are seeing that on ground with hiring and so on and so forth. So fundamentally, it does seem that from a business perspective, IT looks to be in an up move phase for the next couple of years. Now, in terms of valuation, I think, yes, the first leg of run had already taken place. They were back to trading at, I would believe a lot of these companies were trading at close to their decade highs in terms of valuations. Now, when you have a result which comes which is far better than expectation, and big up in terms of their guidance and so on and so forth, this kind of move is only natural. So I just think that in the near future, what with the fundamental of the business being strong, as well as the whole rupee depreciation angle, IT will remain a buy on dips sort of story.